Welcome to the House of Obsidian. Welcome to the Obsidian stage. If this is your first time, on the left side, you will see the ledger. The ledger is where all of the chat, all of the questions, all of the conversation that takes place that's not voice-based. So if you hear anything that we say during this AMA that piques your interest and you want a follow-up question on it, anything like that, feel free to drop it in there. Questions will be documented and written down, so don't feel like you need to wait till the end to ask questions. Joining us today, we have Dex Finance, and we are so excited to talk with them. We've got the Jaded Emperor and the Dex CEO with us. Welcome, gentlemen.
Yeah, thanks again for having us.
Hello.
My name is Jake, and Jaded is actually Mark. We know it's a little weird calling us by our screen names, but
hey, I love it. My name is just Matthew on here, so Jake and Mark. Are you guys doxed, or you just dox your first names?
About half the team is doxed. I was just talking to somebody. We planned a long time ago to host a public doxing party at 50 million market cap. So that's still the plan. All you guys are invited. It's going to be in Las Vegas, and that should be a good time. But Mark is actually fully doxed, and our team is the whole team is KYC through Solid Proof.
Awesome, sweet. I love to hear that. I mean, that's one of the first questions we ask anytime is, just because we're in the DeFi space, how do people trust you if they don't know you? And you guys are working on that already. That's very cool. The first question I wanted to ask before I even asked about your team is, if someone is listening for the very first time, they just sat down, they have no idea who you guys are, what Dex Finance is, besides the 4 sentences they read in the event description. Can we just talk a little bit about who exactly you are and what you're building?
Yeah, sure.
Great question. Yeah, you want to fill that one, Mark?
Sure. So first things first, I think anyone who's familiar with Seniorage and algorithmic protocols will probably have an easier time following what we've been building and kind of envisioning how it all comes together. The project that we're working on here. So what we're trying to do is we're trying to peg essentially to the US dollar, and in that process we've taken different mechanisms from projects that you might be familiar with, like Tomb, and then we've innovated and built upon it.
Okay.
So much to the point where we're not even really all that similar to Tomb or that sort of protocol anymore. We've created a system that we've designed to maintain peg indefinitely with our smart contract treasury system and our regulation pool. And then we've also introduced the concept of a proprietary ETF system. And all these things kind of come together in a way to create a whole different beast of DeFi algorithmic protocol is.
Awesome.
I think just to interject real quick, I think too, on a higher level, just to kind of give you a scope of what we're doing here, is we're really trying to be a platform for, we kind of joke by saying we're a platform for adults, kind of. We're not really into all of the meme stocks and the meme coins. We want a place for people with real investment capital and more retail investors to come to the space and feel welcomed here, where they don't have to be super knowledgeable about the little intricacies of all the DeFi stuff, but just come here and be able to feel comfortable and welcome to safely invest.
Sweet. Yeah, I love that. When one of the first things that you mentioned was being pegged to the US dollar, are you guys calling yourselves a stable coin then? Or is that the goal?
No, I wouldn't. I mean, I definitely wouldn't call it a stable coin, just for regulation's sake. But algorithmic stable coin, sure. We do believe we found a very interesting method of peg regulation that hasn't been seen before. And thus far in the first couple of weeks, it's price action has just been absolutely phenomenal. So we might have just kind of bridged the gap here between some of the existing peg regulation that just gives these big swings back and forth. So yeah, that's kind of where we're at.
Yeah, cool. I guess just a follow-up question on the original question that I asked, with if someone had no idea. So part of the answer was algorithmic, and that's like a niche in DeFi. And then again, like taking some of Toom's ideas, that's another niche. If someone wasn't, and you even said that, Mark, Jaded Emperor, you're Mark, right?
Yep.
You even said that, they're like, hey, if you don't know what these are, you might not follow as well. So if someone didn't know, right now we have 57 people listening. If one of them has no idea what algorithmic is, and if they have no idea what Toom is, if you could, I guess, like, and I think you started to answer this, Jake, but like, if there is a problem in the market that you guys are trying to solve for someone that didn't know, like you said, step by step, for someone that didn't know, do you want to paint like an even simpler picture?
Yeah, I can give you the quick elevator pitch that we've kind of boiled this down to. Essentially, stable coins, like you mentioned, are stabilized in a couple different ways, right? You can be actually backed, like a one-to-one, right? So like USDC, for example, for every token in existence, there's an actual US dollar to back it up, right? There's a reserve, and there's essentially banks that handle these reserves to guarantee that you're not losing the money, right? As Jaded alluded, we work on a seigniorage model, which is essentially an algorithm that's controlling the supply of the US DEX token, of the PEG token, in the marketplace, right? So, general principles of economics, right? If there's more supply, the price is essentially going to go down, right? And less supply means the price is going to go up.
Right.
Now, in the traditional model, the way that protocols have done this is with the same elastic expansion of supply, right? Where there's a certain amount to start out with, and again, based on a calculation, this algorithm, supply is either put into the market, via expansion through they call it a boardroom or a masonry in Toom's case, right? Or through a bonding mechanism, which essentially under PEG would allow you to like remove supply from circulation. The two biggest challenges we've seen with this, and that we think that we've solved here, on the upside, right above PEG, the problem is, so typically, you would be staking your shares in the boardroom, right? And every epoch, each expansion period, the protocol would just divvy out all these tokens, right? So the issue here with this is, sure, it does work to an effect, right? If it's much higher over the PEG price, all this extra supply essentially does bring it down to bring the price down, right? Because everyone's going to get these free tokens and they're going to sell them. But the problem is that if nobody sells, if they just hang on to them, then the price doesn't go down; it goes up actually, because people are still buying, right? And then the protocol keeps thinking, oh well, we got to get this further down to PEG, so it keeps spitting more and more out, right? And then all of a sudden, 2, 3, 4, 5 epochs after the fact, what happens is everyone starts selling, and then it just causes this waterfall panic selling effect. So in this case, what we've done is we allow people to stake their tokens in what we're calling a regulation pool. It's not quite a boardroom, right? Because you're actually not getting the PEG token. So what happens is we do have an expansion phase, right? There is a boardroom type of deal where new US DEX tokens are being introduced into existence, right? They're being minted. Now, instead of just giving those directly to the share stakers, what we do is the protocol gathers them all up and actually sells them individually based on a number of factors, primarily involving our treasury-backed assets, the current circulating supply, price impact, these kind of things, right? So essentially, what we're doing is we're taking the regulation of the selling out of the hands of the investors, and letting that be handled by smart contracts. And then what we do is we take the profits, the proceeds from those sales, and we go ahead and buy our ETF tokens, and then distribute those out to the investors, right? So once an investor has an ETF token, they can go ahead and sell it. They can hold it, right? Whatever they want to do, and it has little to no effect on the protocol itself, right? Because they're not just dumping PEG tokens at that point. We've already handled that part. Now the other part is below PEG, right? Where again, in the traditional model, what happens is if it goes below the peg price, now there's the need to remove tokens from circulation. So in like the standard 2 model, right, what happens is they would issue these bonds, right? Essentially this is like your opportunity. You would buy a bond below the peg price, and then you can redeem it above the peg price. It sounds great in theory, but the big fatal flaw here is if it never gets back to peg, which we've seen a lot of times, it essentially leaves the person who bought the bond holding the entire bag.
Right, exactly. And so what you guys are doing differently, just for now that you just hit that again, so if I am stuck holding the bag, how are you guys tackling that issue?
Well, so what we've done is we actually just got rid of those bonds. We're not using them at all. Essentially, we just yeah, we just got rid of them. And the reason why we don't really need these bonds anymore is because of this surplus in the treasury, right? So, what happens is as we're selling these newly minted US DEX tokens into circulation, right? We're saving a little bit for the treasury, right? So, anytime it were to go below the EPOC or below the peg price, right? We can just go ahead and buy those back with our own assets rather than forcing that on the investors. We currently actually have twice the value of all tokens in circulation right now. So, that's why we've been kind of promoting the safety and security of our US DEX USDC pool. Because it's one algorithmic stablecoin pegged to a hard asset backed stablecoin, also backed by a massive treasury that, in theory, and potentially could buy back every single token in circulation if need be,
and buy it back twice with where you're at right now.
Right.
So you're essentially you are double backed in the current state. Awesome, sweet.
Correct.
The next question I wanted to ask is, and you mentioned a minute ago, one of you, I think it was you, Jake, that mentioned that you've been experiencing positive price action. This isn't like a traditional question, but I've been asking really any projects we've been talking with in the last 2 weeks. Just in this specific market, how do you see DEX operating? Do you see you guys having to make shifts and changes? Because I'm sure when you guys were building DEX, the goal wasn't to launch, and I don't know that anyone's goal is, hey, let's launch in a bear market. But now that we're here, what are you guys doing to still ensure your success as a project?
Another great question, and yeah, we definitely did not intend to
not at all
launch as Bitcoin was losing 30% of its value. No, ironically,
the exact same day that UST pegged, actually, so we picked the perfect day.
Jeez.
Yeah, I mean, ironically, we actually probably saved our investors a ton of money because we did have an IDO actually we just launched our own launch pad, DEX pad, and like I said, we had told everyone that the day before that this was going to be the preset would be in USDC, right? So everyone kind of stabled up and again, I think it probably saved a lot of people money because they had deposited in USDC, and also it saved us because everyone had put their money in, and we weren't, if it was in BNB or something else, we would have got crushed, right? So, but I mean, given all those factors, the story still is the same, right? So, I mean, again, we have an algorithmic stablecoin pegged to one of the only actual asset-backed stablecoins,
and it's backed to USDC.
Yeah, the treasury is backed in USDC, backing the price of US DEX, right? And then, like I said, USDC is backed like 1-to-1 with the actual US dollar, exactly. Right? So, you see all these, people just freaking out about even Tether, losing value, right? And so we feel that the plan was always to have a stable pool and one a little bit more, riskier, volatile, pool token. So, we're still giving people those options, right? But realistically, our USDC US DEX pool, is I think it's at 2.5% daily right now. with no signs of slowing.
Do you
So
guys
it's
feel
just
like
a really
I was going to say, do you guys feel like you're pressing more? So right now, you always had a safer and a riskier option with your two different pools. Do you guys feel like you're pressing more into the USDC side of things right now, just with how the market is? Just because I mean, that's probably more attractive to, I would say, the general public right now. There's definitely people who are still like, that recognize that bear market doesn't mean end of the world. And hey, this is actually a good time to invest if I'm being wise about my investments. But to the general public, when people are freaking out and withdrawing, do you feel like you're pressing more into USDC just because it has the pitch of being safer?
I mean, I wouldn't say pressing more into it. I mean, our objective's kind of been the same since day one. In fact, we even, our first token that launched about a year ago, um, the DEX IRA token, which
Mm-hmm.
is kind of was designed to kind of mimic that of like a traditional IRA. That's like a very long-term vessel, right? That's like you get there's no buy fee to get in, so you can always keep adding to your rewards, right? But there's a 30% sale tax if you want to get out prior to the 1 year holding period, right? Similar to like the age restrictions of a traditional IRA, right? So we know that that's like a very long term strategy, right? But it's not for everybody. So other people want higher rates of returns, higher rewards, right? Um, but at the same time, there's different levels between in that as well, right? So we wanted to give a stable option as well as a little bit higher risk option, and I think we've left the floor open, and honestly, people aren't necessarily jumping at the more stable option.
Okay.
The numbers are fairly close as far as people providing liquidity for each one.
That's cool. Yeah. I mean, that's an interesting, I guess that's just like curiosity on my point, just because you never, you never quite know what people are going to be interested in investing in when the market becomes unpredictable. And you guys have like actual statistics to say, hey, this is what they're choosing. And I mean, that surprises me that it's not more significantly more so the stable option. Um, but I guess
Yeah, I mean
that's also a
it's
reflection of
DeFi,
your
right? So
community. Yeah.
Yeah, I mean, people do chase the APRs, but I mean, to be honest, if you look at the charts together, or side by side, they almost look. I mean, the US DEX chart is definitely more stable or more general trend.
Yeah.
The DEX share chart has bigger swings, but the general trend line is about the same, to be honest.
Hmm. Yeah, that's interesting. It's intriguing. You mentioned just now that your first token that you launched was an IRA. You said that you launched that a year ago. When did so
Yeah,
as a
yeah.
project, when did Dex form? Just that I have like my timeline correct.
So DEX IRA launched late July 2021. So we were working on it for maybe a month or so prior to that. It's kind of when we kind of started formulating our ideas and getting the team together.
Okay. And then you guys just launched the USDC backed one. I mean, that was recent, right? Like in the last,
Yeah.
that was
So
the day UST depegged.
yeah, so we launched Dex IRA July 22nd of 2021, and then around I would say September, October, so we started to really dive into the development of the money market. We had been planning it for a little bit prior to that, and admittedly, at the time, we were in kind of the fork season
Right.
of rebase tokens, and so a lot of our whiteboard or plannings was based on a bunch of different rebase concepts that we were looking into. And then we kind of just shifted gear when we kind of realized that the rebase model wasn't exactly working out long term in terms of sustainability, and our whole ecosystem is really kind of aimed, like Jake was saying, towards a more sustainable, healthy, mature, yield. So we ended up switching gear away from Olympus and kind of integrating other concepts from these different protocols like Balancer and Beefy and Tomb and whatnot until we got to our point. And then we still kind of have the fingerprint with the bonding mechanism. We have the Olympus fingerprint from our original plans, right?
Cool. Yeah, that makes some sense. Someone just shared, if one of you guys want to peek, someone just shared in the ledger chart and wants to confirm that that's the DEX RIA token. They were just checking it out.
Yeah, that's correct.
That's the
Sweet.
one.
Yep.
Yep.
So you can see it in the ledger. Yeah, that's the current chart if you want to check it out. The next question, I actually, since he just posted that chart, just about your guys' current price action. Are you still, I haven't looked, at least in the last couple of days, how are you guys doing in this market right now?
Oh, fantastic.
Are you guys like one of the rare projects that's thriving and green right now?
Yeah, so I think I can literally speak for everyone since I was in the pre-sale. But if we, anyone who invested in DEX during the pre-sale is in the green.
Cool.
And we launched the same day, like I was saying, the USDT peg. So it's definitely being a safe haven, so to speak, for people's portfolios for sure.
Yeah, that's a huge win. I love that.
We pre-sale launched at $400 for our DEX share, and it's currently at $425. We're about 2 weeks almost post-launch. And then our peg token, is supposed to be pegged to at least $1. It's sitting at $1.50, right? So we just being healthy.
Perfect. Sweet. Anything that is healthy and just doing well in this market, I love to see. That's huge. The next question I want to ask is about your guys' roadmap and what you guys are building, like essentially your short-term vision, your long-term vision. I know we talked about the problems you're trying to solve, who you're going to be in this market, but I would love to hear just like some nitty-gritty details and specifics just about your roadmap. You've been post-launch on these tokens for 2 weeks now. You are doing well. What's the roadmap look like?
Oh boy, that is
I'm sure this is a long question.
Yeah.
We're gonna have like 5 conversations inside of. So
Well, I'll tell you what, we the biggest thing right now for us is, in terms of short-term roadmap, is kind of rounding out some of the functionality and the kind of fine minutia of this system. We found that it was nearly impossible to launch everything at one time. We got into some like weird, like kind of chicken and the egg situations where, like we wanted to have ETF rewards, right? But in the ETF, there's the tokens within the ecosystem, right? So, you can't launch one without having the other, basically, right? Today we're going to announce, another big, major aspect in terms of bonding, which is a different type of bonds that we talked about before, right? But so we're still adding to this. We have, like I said, this bonding that's going to be live today, and we have one more kind of major feature that we had said that we were putting together, that involves like we're calling them multi-step auto compounded strategies. This is like another really cool feature that we're working on that essentially takes your typical auto compounder like Beefy or Reaper, right?
Mm-hmm.
Where it would just claim your rewards and keep putting them back in the same pool, right? Whereas we've developed basically a way to be in multiple pools at the same time, and you can basically select which strategy you want based on your risk level, and this is decided by the allocations of your investment within USDC and the other pools, right? And essentially what happens is we compound your rewards from one pool into the next pool, and then ultimately that pool into the regulation pool, and then kind of let you set like a take profit level at the end of the loop. So those couple things are definitely real close on the roadmap. And then moving forward, we really want to start utilizing some of the tech that we already have. We built this custom IDO launchpad, so we want to start building that out and allow our community to kind of have opportunities at other projects, right? Our own swap is in the semi near future, primarily because we have a lot of crazy kind of tokenomics with just reward tokens
Mm-hmm.
and such, and just easier if we do it on on site rather than having to send to PancakeSwap or one of the other exchanges, right? Cross chain is definitely big on our list. So things like that.
Cool.
We're also looking into different lending and borrowing mechanics and different ways that we can implement some of those practices too. Different things that other protocols are doing to promote, a deflationary mechanic on their peg token.
Cool. Would you say that you guys are currently, your PEG token anyway, is it currently inflationary or deflationary?
Oof. It's almost both. Depending on where it is above the peg. The you know, if you're above the peg, it's inflationary. If it's below the peg, it's deflationary essentially.
And so, I mean, is your goal to make it fixed deflationary someday, or is that how you guys are intending on operating, as it just ebbs and flows above and under the peg?
So the protocol is definitely designed to ebb and flow to some degree. And so what we're really doing is we're kind of skating above the peg, and taking the profits from there to fuel the regulation rewards, the ETF rewards for people. But then, like I was saying, we'd be looking into different methods to um, create a pressure on the deflationary setup, so that even if it's below peg, we still have a bunch of different deflationary mechanisms to kind of counteract that, right?
Yeah, that makes sense.
I think that's you mentioned your last point there is maybe good to mention, and we have had quite a few people asking about this. Um, you know, and this goes with all the seigniorage type of the two models. Um, is what happens after the 1 year period when emissions stop, right? And the answer essentially is create enough utility in that time uh, to where once the flow of rewards stop coming out, there's enough utility to maintain price action and scarce and scare. Well, ultimately at that point it becomes for sure deflationary. It's when the supply has capped out. Then there's just a finite amount, right? And the
Right.
scarcity adds value, right? And if you're using it to, if the share tokens are used for, again, like launch pads or, um, trading fees and such like that, like that's what becomes the value in the tokens.
Sweet. Yeah, I love that. Um, just as we were talking about roadmap, and you mentioned a few different things, I wanted to go into detail a little bit on some of those. Equality in the chat asked, he said, multi-step auto compound, being in multiple pools, compound rewards by letting them drip into the next pool, question mark. I would love to hear a lot more about this. This sounds like my risk level. Can we talk a little bit more about the multi-step auto compound strategy?
Yeah, of course. Like I said, we kind of started with the like basic beefy or Reaper type of setup, right? Where
Mm-hmm.
it's like you would imagine, right? It's a auto compounder where at the base level, right, you could just compound into one rewards back into the same pool if you just wanted a single loop, right? Um, but we took it a kind of a step further where essentially you pick a strategy based on a risk level, right? So let's say a balanced strategy would involve you having like an equal allocation, right? So like 33% in the USDC pool, US DEX USDC pool, 33% in the DEX share BNB pool, and then another 33% in the ETF rewards pool, right? The regulation pool.
And just to break that down real quick, what is in for anyone that's listening, what exactly is in? I mean, I think the USDC pegged pool is pretty clear. What is exactly in the other two pools?
Yeah, so the middle one I mentioned, the DEX share BNB pool, right? That's the share token. It's paired with BNB. It would be considered a more volatile asset, so to speak, which has more inherent risk by being in it, right?
Mm-hmm.
That one is not backed twice over by our treasury. It's not BNB fluctuates as well, right? So
Exactly.
carry some higher risk, right? It does actually have. I have to look. I think that one's paying out. I think 4.5, maybe 5% right now. So higher risk, higher reward, right? And there's no real cap on that. We've seen the T share token get to 20,000 and change, right? So, and again, not that's not. I'm not trying to give price predictions or whatever, but it can go very high, it can go very low, right? Um, the The regulation pool is an interesting one because again, it's a single asset, right? There's no risk of impermanent loss like there is on the other two.
Okay.
Which I should mention as well. Again, the BNB deck share pool does have a much greater risk of impermanent loss, right? For anyone who's not familiar with this concept, this basically happens when you're providing liquidity, when people are trading against the liquidity pool, the liquidity tokens that you're providing. And I guess it's a bit technical, but the general rule of thumb is if the price difference between those two tokens moves 100% in one way or another, right? You can expect to lose 5% of your initial capital, right? So that's always also something to consider, right? Whereas the USDEX USDC pool, right? There is some risk to this to impermanent loss. However, right now we have ranged between 1 and 1.6, I think was the top, right? So compared to the USDC token, which is always $1, right? You're talking about a maximum impact given the current price action at like -2.5%, and we're paying out 2.5% daily. So as long as you're holding for more than a day, you can pretty much rule out impermanent loss on that pool. But the third pool is this single stake DEX share to earn the DEX ETF tokens. Because it's a single stake, right? You just put one token in, it's not liquidity. There's no risk for impermanent loss, right? And you're receiving back these DEX ETF tokens, which again are not, some of our ecosystem tokens are within the ETF. They make up like less than 20% of the pool, but most of that pool is in BUSD, Bitcoin, ETH, larger to mid caps, ADA, XRP, those kinds of things, right? So, the rewards that you're getting back, you don't necessarily. I mean, you're welcome to sell it, and again, if you do, it's not going to have a great impact on the protocol. It's kind of this designed take profit mechanism that we've built in, but also like. A lot of people are just holding them because they're a great store of value. And if if you believe in crypto, you think the market's going to come back, right? Essentially whatever you're getting, whatever ETFs you get right now, if we get back to all-time highs, it's going to be worth double, right? So, that's the explanation of the three pools. Now, the way that the strategies work is, again, you pick a risk level. So like I said, balance, you could be evenly distributed. A more risk-averse strategy would be more front-loaded on the USDEX, USDC pool, right? Our gunslinger, quote unquote, strategy would be, much more high risk, but higher reward, and those allocations would be devoted more towards the DEX share BNB pool, right? Because you're getting higher rewards,
right?
But whatever strategy you pick, essentially. We just kind of create this loop, right? So, we compound your USDEX, USDC shares into your DEX share BNB pool, right? And then we take your DEX share BNB pool rewards also in DEX share and put it into the regulation pool. And then at the end of that loop, where you would claim your DEX ETF tokens, you can choose to either take profits on those, and we just send those back to you, or you could continue to compound, and we could sell those off for you and put those back into the USDEX USDC pool.
Beautiful. And when do you guys plan on this? Is on your roadmap, so it's not out yet. Do you have a rough time estimate when you intend on launching the multi-step auto compounding strategies?
Yeah, that we don't we hate missing deadlines.
Yep.
But don't quote me on this, but we are hoping the end of this week, next week, hopefully.
Oh wow! So way quicker than I was.
Yeah.
I feel like most things when I ask roadmap questions, it's like you're telling me a couple quarters out. So your goal is in the next 2 weeks.
Yeah. We're hoping that we can deploy it as soon as possible, preferably in the next couple of weeks. Yeah.
Beautiful. Sweet.
Well, again, this was part of the original plan for this,
Yep.
for this whole kind of ecosystem, right? Um, our first goal was to solve the kind of the major challenge that we've seen, right? Um, which we've done in, various aspects we've just discussed, right? But then one of our main, ethos of the project, that I alluded to earlier, was to kind of allow more retail investors to enter the space without having, this expansive knowledge of, intricate trading strategies, or, that just even the time to sit there and watch for, adverse price conditions, or, the changing APRs and such, right? Or, even experienced, traders, um, you know, it's still a lot of work. You have to go, if you want to make sure those rewards are compounding, you have to go click that button, a couple times a day and put them back in, right?
Yep,
So,
exactly.
um, the strategy was something we kind of set out to do, and they're already developed. Now it's just a matter of implementing with, real world conditions. So I almost wouldn't, like I said, that's kind of more in our development launch plan as opposed to a roadmap plan. Stuff like swaps and um, investment, lending, borrowing, that kind of thing. That's more roadmap. That'll be, at least a month or so, quarters down the road. But yeah, we're just trying to round out, what we kind of set out to do first.
Got it. So the auto compounding, that is specifically launch plans. That is, the goal is in the next 2 weeks. You're not setting a hard date because you don't want to be the guy that that gives a day and then pushes it back 3 times.
We've just done it quite a bit, so we're weary about it.
Yep,
We plan to launch like just prior. We plan to have the farms up a little bit sooner. We plan to have the regulation up a little bit sooner, but
and everything takes time.
As long as everything's working. Exactly.
Yep, exactly.
As long as everything's working,
and you can be I think a healthy community is going to be graceful when you are when you're building.
Super graceful.
Yep. It's clear if you're building and you're communicating.
Beautiful.
Yeah, that there's grace and freedom to say, like, okay, do it well. I would love to see it, but do it well.
Also to it,
yep,
it is a little bit, I would expect a little backlash if we were forking something, right? But growing pains of doing something unique from scratch, just you just got to roll with it.
Yep, exactly. You mentioned that you guys have had, and just because you've been building kind of behind the scenes since like last June, the reality is as a team, you've watched a bunch of different trends play out and see what works and see what didn't as you launch something that is unique to yourselves. And so if you can learn well from all of these trends and pick up the winning pieces and discard the losing pieces, and then as you're building that, I mean, that could be a huge win for DEX.
Sure. Yeah. I mean, we personally, even I played the tomb fork, kind of run around and like, yeah, you make money in the first couple of days, but it just was always really baffling that they, even the Olympus season, right? Like, I get it. It's almost, you could almost write it off as part of the marketing where you're offering these huge rewards to get people into the project, right?
Mm-hmm.
But it's just so unsustainable, right? Like, you can't offer, some of these come out and like the first couple hours, like 1,000% daily, like the money just doesn't grow on trees, right? Like if you're offering, even 50% daily returns, that means you need 50% more investment in new money coming into the system, which is just not sustainable, So that was the main thing that we wanted to regulate, and honestly, 2.5 to 5% is like pretty good still, So, would you rather have 2, 3, 4, 5% daily for the next year, or do you want to just crash after a few days of 50%?
Yep, exactly. Yeah, I think that's just kind of been the market since, because it went ohm, then it went node, then it went rebase, and the majority, and in each of those trends and seasons, there were, if you can identify them, there were high quality teams and high quality projects. But amongst the ones that were doing well, there was all of these projects that it's exactly what you're saying, that I invest and I make money for 3 or 4 days, and then I look for the newest one. And you guys are trying to do something that is definitely not a come make money for 3 or 4 days and sell your tokens and move on to the next project. You're working on building something that is unique in its own right, and is not just a short-term investment.
Yeah, absolutely. That was our kind of our desired plan, and we really took a lot of time to kind of ensure these measures to promote kind of long-term steady growth. And I think that not only is that good for investor returns, but also just overall strength of the community, right? Where you find people that are happy with making a slight amount of a decent amount of returns, and build off that, where you just like you get these mercenary farmers coming in for a couple days and then just blowing out the protocol and then going on to the next one, right? You're kind of building cumulatively building the community this way.
Well, and even when you say like a smaller steady amount, what you guys are offering, I mean, you said earlier it's been pretty consistent, like 2.5% on the USDC pool right now, which is like, if you just take a step back and look at where else you could invest funds outside of DeFi, like that's a pretty solid return.
Oh yeah.
Already. It looks small when you're talking about the last like 4 months of who can get to 1 million APY first.
Yeah. When you're comparing our protocol to protocols that simply cannot survive and die, then yeah, it can seem a bit modest.
But I don't think the reason I say that is I don't think that's a negative thing in any capacity.
Yeah,
saying,
absolutely.
oh my gosh, we only have, it's only 2.5% a day. Like, that's pretty significant.
Well, also too, part of our, I mentioned that part of our mission statement here is to, try to attract more retail investors, right? And like, we don't necessarily, we don't want the mercenary farmers that are looking for those, crazy APYs, and we'd rather try to onboard, newer folks or people that maybe aren't quite familiar with this little kind of niche community of DeFi, farming, and give them an opportunity where they're going to look at this like Chase doesn't give me these returns, like I'm getting 0.05% on a savings account with money in it, and
Well, and that's if you're lucky.
Yeah, right. Like, and I mean that's the kind of people we're trying to target.
Yeah, that makes sense. And that comes back to what you said. I mean, I think one of the first sentences you said is that one of your goals was to be a ecosystem designed for people who weren't quite as memey, and into like just all of the short-term meme coins, and you were looking for regular investing adults that were just looking for something relatively stable to invest their funds into. And I want to, as I'm saying that, I'm like looking at this question list. Equality asked, and so this is a good question to tie in there. Equality asked, would you say that based on your statement earlier that this isn't a good community for people who are very memey, even if I have serious capital?
Oh no, I'll take that back a step. But we definitely don't want to exclude people. We are a very inclusive community, and no, we absolutely would appreciate everyone's investment in not only capital in the project, but their time and resources in the chat, right? We just personally just would like to keep a more professional approach, and kind of maintain some certain standards, I suppose, of professionalism in that case.
Yep.
Of course, all are welcome.
Yeah, the APRs are healthy, and so it's just a matter of, do you want to make 2-3% daily on your big bag, as opposed to something a little bit more modest. But we're really just trying to promote the idea that this is a protocol where you can park your money for long-term sustainable profits, right? So that's kind of where we're just trying to get away from the degen, where when you think degen and this sort of behavior, you're thinking get in, make your money, get out, quick profits, trying to flip your money as opposed to grow your money in an organic and healthy way.
Right, exactly. That just made me think of another follow-up question there. A lot of these projects, when you see like 1 million, just for random number here, a million APY or a million APR, that's not, and what like novice investors fail to realize is that's not an intended APY in US dollars. That's in their token that is extremely inflationary. And so by the time that you get your million APY after a year, the value of a single token could drop by like 1,000,000%, since that's the number we're using. With your 2.5%, is that 2.5% on the DEX token that I'm receiving, or is that based on the USDC?
So, that's a great point, and I'll give you an example that we just were looking at the other day, right? I guess to directly answer your question, that is our numbers are based off the APR currently, for the US, for our ecosystem tokens, in the farms, right? So APR is going to be determined on the price of DEX share, and like you said, it may be higher, maybe lower, right? The regulation pool is also APR, which just to kind of clarify for anyone who doesn't know, APR would be simply the amount of returns after 1 year, whereas APY would be essentially compounded, the results compounded on top of each other, right? So with the regulation pool, again, this is kind of this built-in take profit mechanism where, again, it is APR that we kind of judge by. That's the KPI, but this is basically in blue chip kind of tokens, right? So, again, alluding back to our kind of our mission statement, our ethos about helping investors build kind of long-term wealth as opposed to the quick pump and dumps, right? Our regulation pool offers the DEX ETF token, again, blue chip, mostly blue chip tokens, 30% in stable coins, right? So something like this, it would be very hard to lose a ton of value outside of like the whole market collapsing, right? If you're in this space to start with, you probably don't, you're not betting on that anyway, right? We're going to see swings like we have just recently, but if you're a long-term holder and you want to be in the space, like we believe that there's a long bright future for blockchain. It would behoove you just to kind of hold and always feel free to take profit. That's also maybe a downside of some of this degen stuff. You kind of start seeing the APRs and APYs and you just think it can last forever. We do feel like we've kind of solved these problems and we think we can be very healthy long term, but always take profits. And again, this method of paying out in the ETF token kind of gives you that ability without hurting the protocol at all. But quickly back to some of the farm stuff, which actually do pay out in the share tokens, which again, deflationary and inflationary, and again, it could, you don't know what the end price could be there, right? We were looking at adding an APY calculator, just to kind of give people an idea of what they could be looking at. And we specifically stopped it. Typically you'll see them, a 1-day return, a 7-day return, a month, and then maybe out to a year, right?
Yeah, exactly.
So we actually stopped it at 90 days because we don't want to give the impression that that you're gonna turn $1,000 into $1 million, right? That's probably not gonna happen, right? And quite frankly, like that's the numbers you get when you put that in the calculator. But a realistic goal to put $1,000 in at 2.5%, and after 90 days, take profit on 5,000. That seems somewhat reasonable.
Which is a solid investment. I mean, that's a 5x in 90 days.
Right.
And I think everyone is searching. I think during like ohm season and node season and rebase token season, everyone was definitely searching for like, where's my 100x? But that's like a unicorn. That happens every now and then. If you could find a 2x in traditional investing, that's a massive win. If you can find a 2x in real estate investing, that's a massive win. And so if you guys are presenting the opportunity for a 5x over a 3-month period, that is a significant win on your investment.
I mean, and again, these are, we're not guaranteeing
that's not a guarantee.
numbers. We're not, I don't want to make it seem like we have, we necessarily have this unicorn, which, we may have, but we just want people to be realistic with their investing expectations and provide, a sustainable return, which a lot of that can be mitigated by our regulation pool, because you are getting actual, real value currencies.
Yep, exactly. So, I mean, essentially what you guys are doing is saying, hey, we've got, amidst all the Wild West DeFi, we are presenting an opportunity that is a little bit more predictable, a little bit more stable, for a place where you can park your money and receive a pretty, I mean, and maybe in current DeFi, a fairly modest, but in the large scope of things, a solid return on your investment, because it is more predictable and a little bit more stable.
Yeah, I think that's a very fair assessment.
Yeah. And I mean, honestly, I think that in this market, especially entering into, and this is not like to spread FUD about crypto, but the reality is, you guys, like, crypto moves in seasons, and it always has, and it likely always will. That when we enter a summer season, that's amazing, and it will pass and become a fall, and that will pass and become a winter, and that will pass and become a spring. There isn't like this, oh my gosh, crypto's dying. You watch your seasons and know what to invest in each season. And I think as we're in this season where it feels a little bit more like a crypto winter for some people, this is definitely a time when I think investors are going to be looking for a little bit of predictability and a little bit of sustainability. And so, as much as I know, like we laughed about it earlier, as much as launching like the day that UST depegged, and like, oh man, can you find a worse day to launch? But that might not actually be a bad thing. Like, that may be a positive thing that benefits you, because people are looking for a little bit more safety now.
Yeah, in a way, I would almost argue, and I've been saying to Jake here, that launching the day USD depegged and the market as a whole was on a huge downtrend, I feel like was kind of a blessing. We got to roll out the protocol in a kind of like battle-tested condition, where we could see how it would be received with the most amount of fear and uncertainty, despair going on in the market. But most importantly, something that I definitely love to highlight is that with our DEX ETF token, as you're accumulating that, you're essentially dollar cost averaging the market as a whole. So during a bear market like this, if you can be collecting or even directly investing in the DEX ETF, you're investing in Bitcoin while it's down, Ethereum while it's down, BNB while it's down, Cake, XRP while it's down, right? So when we go through those seasons, which I completely agree and I think it is like a 4-season cycle, like you say, right now is the best time to be sowing those seeds. Come next summer, the DEX ETF itself should appreciate in value by some great margin.
Well, and man, the reality is, the most money in DeFi is made in the winter, and based on what you invest in a winter. Like, it is buying season if you can be wise about what to buy.
Yeah.
I'll tell you what. I just looked at the ETF price. Yep. We are up from when we launched, and the first tokens were purchased for the ETF rewards pool. It was about $4 ago, a little over $4 ago. So, if you were in the first batch of ETF recipients, you would have already made about 10% just by holding.
Wow, and that's in 2 weeks.
Right.
Yeah.
Less than actually. We just launched the ETF about a week ago. Yeah.
Dang, 10% gains in a week in a bear market.
Right.
Yeah.
Love to hear that. Well, I want to ask a couple questions. I know I've been like weaving in their questions throughout this conversation, but I do want to ask a couple of the questions that didn't quite fit into the topics, just so investors feel like they're getting their questions answered. The first question was from Kurt. If you are looking into targeting newer investors, when you mentioned the like Chase Bank 0.5% a year thing, if you're targeting newer people, have you looked into Web 2 implementation at all?
Yes. I'll be honest. One of my long-term holds is a token called Elastos. I've been in that for a long time. I am a huge advocate for Web3 kind of technology, and I think it is definitely the future. Specific implementation, I guess, is definitely a little ways down in the roadmap. But I can tell you this: as some of that tech is rolled out and being implemented in certain aspects, we will definitely be on the forefront of that. Yeah.
Cool. Sweet. Next question from Masood. Just to summarize, forgive me as I was late. If the price goes up above the peg, the contract sells the token, increasing supply to reduce the price. The money generated is used to buy assets for the treasury, which is provided to stakers in the form of ETF rewards. Then when the price is below the peg, the contract employs deflationary measures to increase the price back to peg. Is this correct?
That sounds really almost fully accurate. I think there was the one part about sending back to the treasury. Could be clarified a little bit. We essentially collect all the US DEX that comes from the expansion, and then we sell that. The protocol sells that based on this formula. Only a small percentage goes back to the treasury. In this case, 10% back to the treasury assets in order to maintain the surplus. The majority of it actually gets directly converted into the ETF token and then added to the regulation pool.
Perfect. Sweet.
Yeah, right.
Yeah,
pretty spot on there. Yeah.
Next,
as we
you make it sound easy.
Yeah, that's the goal. Communicate complicated ideas simply.
Yeah. Sure.
And then as we add to that rewards pool, the APR and the regulation increases. Well, it's based on how many people are staked in it, of course, but the APR is dynamically adjusting based on that. So if we are having a big run up where the protocol is doing very well, then that in turn will increase the APRs in the boardroom, as you would expect from a normal tomb fork. But it's just worth clarifying because our boardroom or regulation pool, as we call it, definitely acts completely different. We don't have any kind of locking period when you put your deck share in it, and we also don't pay in epochs every 6 hours. We pay by the minute. So just another, I guess, just clarification for that.
Yeah, perfect. Next question from Crypto Pirate. He said, question, algorithmic can seem like a bad word nowadays. Do you have any concerns from the UST situation that would apply to DEX?
Well, our protocol, for the most part, isn't backed by a single volatile asset, I guess, in this case. Would be a glaring difference, right?
Mm-hmm.
Our treasury is going to have a mixed bag of diverse assets, and then a big part of our treasury is going to be made up of the DEX ETF as well. That should add to our stability as far as our backing.
Sweet. Yeah.
I don't know if Jake wanted to add to that.
Yeah, I mean, I wouldn't say. I mean, I guess I could understand the thought process after some of the downtrends and price action of Olympus and Tomb and all this. I don't know if I would blame that on the algorithms or maybe you would. But what I can tell you is it's less like just letting this algorithm go crazy and potentially it potentially going off on the wild and maybe it's not the right it doesn't work. One of the questions we get sometimes is like are the contracts renounced or and it takes a little quite honestly it takes some trust in our team But we don't have plans to renounce, at least not right away. Because and a big part of that is because there are so many just really intricate, fine details that need to be tuned correctly. And you know, if a great example is when we initially built this kind of automation system, we were modeling it off of what other tomb forks have done, and seeing these big wild swings, right? So initially we had planned to only kind of start this process like over a TWAP of 1.5, right? And what we realized since we launched is like we've like hardly even hit that, right? Because the model is just so much more stable, that we need to account for real world conditions, right? So seeing that now, we've actually kind of revised the calculations, and we're constantly updating to make sure that we're including factors like price impact and things like that to not greatly impact or hurt the protocol by just letting these systems run wild.
Yep. Yeah, that makes sense. And I think the reality is anytime one project makes a mistake or does poorly, anyone that they can like tie back to it, people are going to question things, right? It's like how Olympus had issues. Actually, it wasn't even necessarily Olympus. It was more so there was a bunch of Olympus forks that had issues. And then from there, everyone thinks, oh my gosh, DAOs are horrible. And there was like it felt like 3-month period where if you said the word DAO in your project, it was like a red flag to investors, which is silly because there's nothing inherently wrong with a DAO. That's just a structure.
It's just a voting,
exactly.
a voting model.
That's it.
That's good. That's for community participation. We're implementing that as well. Yeah, exactly.
But just, I mean, there was literally a period where like I would talk to projects and there was like, hey, maybe for like the next month or so, like you should straight up just remove DAO, the word, from your marketing stuff, because people are running from projects with the word DAO. I haven't seen that. That question was the first time I've seen someone say maybe is algorithmic like a red flag, bad word at this moment. I don't think that it has like the cultural impact that DAO did for a couple of months yet. But I don't know. We'll see. I think that anytime a project makes a mistake or does poorly, people, just like general market sentiment, can turn against anything that was associated with that project, even though your project's entirely different.
Yeah, well, I mean, a big part of it just too is that people are learned creatures, right? Like the behavior of being afraid of that is completely learned. If we're in Ohm season and everything is a DAO, everything that comes out is DAO, and then there's tons of rugs, and then most of those rugs are attributed with DAOs because that's what's trending. Or if we're in an algorithmic season and most of those are rugs, and you end up creating a scenario where anything associated vaguely with the project, as long as people are getting burnt, they're always going to be wary of it, right? Even if it's just a word association. So I've had people reach out to me like, hey, you guys should be careful about calling USX a stable coin. And it's like, yeah, I guess. But we also don't want to lie to our investors and say it is what it isn't, right? Like it's an algorithm, at least the term is algorithmic stable coin, right? So
right.
You know what? Guns don't kill people. People kill people. So
yeah.
like, the algorithm model is like super interesting and potentially could be like the future of cryptocurrency. And you could do a lot of really cool things with it, as long as they're not just running wild and we're not letting the bots. Yeah, we're not letting the bots take over. So.
Yeah, exactly.
That's kind of where we stand.
Crypto Pirate, who asked that question, Jake, had a follow-up question. He said, for a noob like me, or he said, thanks, great response. For a noob like me, can you explain what renounce is in reference to when you were talking about when people asked if you were going to renounce the contracts?
Sure. So most smart contracts a smart contract that makes this thing work, right? And, in our protocol, we have, like at least 50, 60 contracts right now that are, operating the system. Basically, in most of these contracts, there's a function that you can call after it's deployed to say that the owner or the deployer who put that contract out can no longer make other calls on the function on the no other can no longer call other functions, which could potentially disrupt the market, right? So, we've taken actually a lot of steps to remove any kind of functions that would, surface level, seem like intentional kind of you know, bad acting, I guess, let's say.
Mm-hmm.
But yeah, we do still have the ability to, kind of adjust the APRs or adjust the model, the functions that buy and sell, right? So until we have that 100% perfectly perfected and we're happy and we know that everything is going according to plan, we want to basically keep ownership of those contracts so that if something does happen, we can change things on the fly in order to protect our investors.
Cool. Sweet.
I think there's probably quite a few investors in this audience that has probably invested into a protocol that has had something happen, but then it's been renounced, and then the whole protocol's kind of shit out of luck, right?
Yep, exactly. Next question from Masood. Can you talk about your team's background? Who are you guys?
Yeah, great question. I love talking about the team. I guess my personal background, I traded U.S. Treasuries on the floor of a major exchange for about 13 years. After that, I started a media company, and I've been doing that for the last 7 years now, I think. About 6 months ago, we stopped taking new clients to focus on this full time, right?
Mm-hmm.
But I think this balance of my trading background kind of giving me some of the inspirations of this, as well as our media company has the resources in being like a full stack development that we're able to essentially build anything we want. We have in-house marketing people and graphic designers and video editors, and so moving into the crypto space just seemed like a really easy transition for us. Our CTO, who's not on the call today, he has been in tech for his entire life. He founded one of the largest tech startups in the United States. Mark here is an entrepreneur. He has several businesses that he runs. And I guess I'll let him speak a little more to that himself, but just a really well-rounded team. We get a lot of compliments, even on our, I don't want to say external team, but our kind of our support, team.
Yep.
We have guys on our team from Germany, from Lithuania, Spain, yeah, Spain, Portugal, Brazil, right? So honestly, you can come in any of our chats, Telegram, Discord, just about any time of the day and find someone to talk to and get questions answered in multiple languages. So
Yeah.
we feel really really proud and happy that we have such a great team.
Yeah, I love that. And you guys, yeah, you jump in a second. I was just gonna say, if you missed it earlier when you were listening, you also mentioned that Jaded Emperor, who is Mark, is doxed already, and that you guys are intending on having like a doxing event where some more members of your team docs and you are KYC'd. So as we're talking about teams, it's easy in the DeFi space, I guess, for like pessimism to take over and say, well, how do I know that what you're saying is true? Well, you guys have docs team members to verify that.
Yeah, I was just going to add and to say exactly what you just said, actually, that myself, I'm doxed. My name is Mark Manridge, and I own a e-cigarette company here in Canada for about 10 years now. And then I have a couple, like a retail business, and then I have a couple online brands associated with it for international orders.
Cool. Sweet. Yeah, very cool. Next question from Miniviz. It seems like burning the ETF token to gain rewards from that was requiring higher gas than usual. Will that always be the case?
So let me kind of explain the burn functions of the ETF, right? So
Yep.
It does in fact require a little bit extra gas, right? Because when you're burning the ETF tokens, what's actually happening in the background is that You're taking however many ETF tokens you have, and you're saying, okay, if you want to take BNB from that, these tokens, right? What you're actually doing is you're sending this sell order to PancakeSwap to sell all 10 tokens and give you back, one of a couple options, BNB, Cake, BUSD, right? So the short answer is yes, there is a little bit more gas. The more complex answer is that what you're seeing on the gas estimation, right? So like when you actually click the button and the little, MetaMask or Trust Wallet little tab comes up and says, okay, this is how much you're going to spend. What's actually happening if you go through with that transaction and then you go and look at it on BSC scan, it's probably about half the amount you're actually seeing on the estimation. It adds in it's adding extra estimated gas because we don't want it to fail, but it does try to use as least gas as possible.
Right.
To further that though, 2 points actually. One is the gas price doesn't change the more you're burning, right? So if you're burning one token, the gas is going to be the same as if you burn 100 tokens, right? So if you're it might make sense depending on how much you're invested and how what you're actually getting back. It might make a little more sense to kind of stack those up and cash in once a week or once a month or whatever kind of fits your schedule, right? That way you'll kind of amortize the gas fee over a larger allocation, and you won't feel it as much. Also, the other option is a really kind of a cool feature that we put in there where you can actually burn to multiple assets. So in this case, what's happening is the same thing. These 10 tokens in the ETF are not we burn the token itself only to verify the supply, right, and percentage of people who own those tokens, right? But if you have 10 tokens, right, you can actually claim all the underlying assets, and basically we just go to the vault and get those assets and send all 10 of those right to your wallet. In this scenario, gas is also again cut in half about because you're not actually going to PancakeSwap to sell them. You're just transferring them to your wallet.
Yeah, that totally makes sense. Next question from, let's do Sevic 2K's question. Can you describe the holdings that you have to buy back, aka the double or the 2x pegged amount that you mentioned earlier? The market cap of US DEX is 154 billion. Can you explain how those tokenomics work?
Yeah, actually, that's kind of a two-parter. I guess might as well answer the latter question first. If you look again, the market cap right now is actually only 75 million. Quick explanation of this is in regards to the PEG regulation, right? So what's happening here is the original algorithm set forth, from the Tomb protocols, right? It's really trying to put tokens into circulation, right? It wants to bring it back to PEG, right? But actually, it's funny. Mark and I were just discussing this the other day. Is when you really look at it, and especially under these conditions, it's almost really crazy how far off these calculations are. Because what's happened is, we have roughly 350,000 tokens like in actual circulations, like in people's hands right now, and over the first 2 weeks, we wound up with like 100 billion PEG tokens that the protocol was trying to spit out, right?
Wow.
So that's why you were seeing these crazy numbers, right? And now, if you put this in context, you could imagine if all those tokens were in the people's hands, we'd be getting destroyed. It's back to 75 million because just this morning, actually, I just burned about 100 billion tokens.
Wow.
So to get us back to normal, and another, to go back to the renouncement issue, um, this is another great reason because we've now that we've seen it under real world conditions, we're able to just burn all this excess supply, and now because we still have ownership of those contracts, we can now adjust the inflationary metrics, and to adjust that expansion so that it just doesn't get crazy like that. The first part of that question, you mind repeating one time? I kind of
Yeah, you
lost it there.
said, so when you mentioned earlier that essentially the token is backed twice.
Yes.
Can you describe those holdings that are backing it?
Right. So again, the huge, 100 billion market cap thing, again, that was just excess supply that we don't need. We did keep some, which is where you're getting even the 75 million market cap. Like I said, the realistic numbers are closer to like 350 right now. And to back those, we have over 500,000 right now in the treasury. It's a multi-signature wallet that's it's kind of guarded by myself and Mark, as well as our CTO. So just the USDC alone is backing, like I said, almost twice over the complete supply. And I guess the way that we measure that is, as we are selling these tokens, right? So we're selling right now. We're selling, every in intervals. We're selling US DEX tokens at, right now we're at about $1.50, right? Um, we don't actually start buying until it goes past $1, right? So essentially, anything we sell above the peg, we're creating additional surplus. So if it was to sell right now, we'd have a 50% surplus, because we only have to buy those back at $1, right, to guarantee that peg.
Yep.
And then in addition, we have some other some another method that I think we're going to talk about in a minute, kind of relating to our bonding protocol that we're going to be releasing today, which is another kind of a key aspect, that just further adds to that surplus.
Perfect. Let's ask like one or two more questions and let's talk about the bonding.
Yeah, cool.
Rax said, so I think this is a follow-up to a question we asked earlier. So Rax said, so when above peg, the treasury takes profit and converts that to ETF. What about when it's below peg? Does the profit take the ETF and use that to buy back USDEX, or does it have enough as a buffer to take care of it that time and bring it back to peg?
Yeah, that kind of is what I was just mentioning. The Right now the treasury doesn't hold any ETFs. As I mentioned, it's basically selling above peg.
Yep.
And directly converting into ETF tokens, which go into the rewards pool, the regulation pool. Like I said, right now we have a current surplus of almost 2 times the circulation, right? So we're not, and it's a great question. We've heard this before because people are sometimes worried, like, okay, what happens if they go below peg? You have to sell. Are you gonna have to sell? And a lot of protocols have done this where, they lose the peg, so they start selling the share tokens or something like this, right, to get money to buy back the peg token, right? In our case, we don't have to do any of that. We already have the money on hand, in USDC, so literally, nothing is affected if it drops below peg. One epoch after it drops below peg, we just use like an inverse calculation, the same as we would normally sell. We just start buying in the same manner. So like you're never going to see any like giant red or green candles. We're not trying to like just jam back to peg or force anything. We like to kind of think of it as a gradual nudge in the right direction. I mean, eventually, if no one else is buying, which it's hard to believe
Very
that would
unlikely.
even be the case because that we're going to buy it up, right? But if it happened to go below, we would just continue to sell until the last person sold their US DEX off, and at that point we'd bring it back up to peg.
Sweet. Yeah, really clear.
There's
But go
definitely
for it.
people kind of waiting to hop into the USDEX farm as well, with the peg being at $1.50. I know that for me personally, I have some funds I got put aside in USDC, and I'm just waiting for it to drop down to like 115, 120, and then I'll be able to enter the farm a little bit more comfortably, right? So I think that especially as the protocol sells to add to rewards, you'll see people be like, "Oh, here's my opportunity," and the pegs in also float back up as well.
Yep.
I will follow up on that quickly though. Again, we're not trying to manipulate the market, right? So the formula is, the higher it goes, that we're going to continue to sell more, right? So like you're never going to see it like maybe 5 times over peg, right? Because we're going to, the higher up it goes, the more we're going to sell and bring it back down, right? But at the same time, like I said, we're not driving, we're not like forcing it down, right? So, and from the 2 week period is, brief technical analysis. You can clearly see some really solid support around 1.2, which, in my eyes seems pretty reasonable because essentially with the treasury backing it at $1, like to put this in perspective, like, if it's pegged to, if a protocol is pegged to Phantom, let's say, and the price is 50 cents, right? The bottom of that peg token could be, nothing, right? Because if people keep selling, it could drop, and we've seen this, it happens a lot where it drops to nothing, right? But um, if people know that we are going to maintain it at one, 20% above is a pretty reasonable, a reasonable price to get in, on top. So honestly, I personally kind of foresee this kind of ranging between, in the 1.2 to looks like 1.6 right now.
Yeah, totally makes sense. I mean, it's a similar concept as any stable coin, right? That's how they keep it stable, or that's similar to like what Horde does. It's similar to Olympus's new like wall strategy that they're implementing. And I don't think that qualifies as market manipulation in any capacity. It's just trying to provide not only sustainability but also predictability.
Yeah, absolutely.
Cool. Well, I'm excited to hear about the bonding announcement. When you were talking about your immediate you had your long-term roadmap earlier, and then your immediate roadmap was two parts. One was the multi-step auto compound strategies that are releasing the next 2 weeks, and the other was, you said, a new bonding. You didn't really say much about it. You just said something new with bonding. So I would love to hear about that. I think a lot of
Yeah,
people are excited to hear about that.
so let me kind of give you a background, and then we can kind of get to the news. We did talk a little bit about the traditional bonds, right, and the two models, right, where, essentially if it goes below peg, the offer is to, investors to buy below peg, at which point they get burned. You can redeem them above peg, and those tokens get burned, which we completely kind of got away with, right? In our model, right, we don't need those because of this surplus, right? We have enough assets on hand to buy back at $1, right? But as I mentioned, we want to always increase that value of the treasury, that surplus, right? Because the higher the surplus is, the more we're able to sell into the USDEX, which then in turn increases the rewards we can give in the ETF regulation pool.
Right.
So that's kind of the basis of it, right? One of the ways that we're doing that is with our own system of bonding, which was pioneered, years ago by the Olympus system, right? And we've seen one or two people maybe kind of try something similar. They use more like rebates in this case, and honestly, all those products have failed. They tend to only try to bond the peg token, which again creates more sell pressure on the peg token itself. So with our system, we actually designed in additional supply that can be used to bond right into the protocol. And in this case, what we're doing is we're basically allowing investors to trade essentially with the treasury rather than the liquidity pool, right? So it doesn't have to be above or below peg, right, at any time, right? We're using a Dutch auction type of system, right, where you'll be able to use bondable assets, right? So in this case, USDC, the DEX IRA token, the DEX ETF token, and BNB, right? So you'll be able to take these four assets and essentially bond, right, where it essentially buy into money market tokens. So you'll be able to bond in these, these assets into money market to get a US DEX and DEX share back in return at a discount, right? And for that discounted price, you're basically getting these tokens vested over a certain period of time. Now, we've seen this model and we loved it. It's worked, and we loved everything about this. And we initially built this into our system, and we wanted to roll this out ourselves, and we built this whole model, but we wanted to make sure it was perfected and living up to the best of its abilities. So we actually got in contact with the team over at Olympus DAO, the Olympus Pro model, and we are very happy to announce that we've actually officially partnered with Olympus. They have come on and are managing our entire bonding platform. In just a little bit here, you will actually be able to go to pro.olympusdao.finance, their bonding platform. Also worth noting that DEX Finance is the very first Olympus Pro partner on the Binance Smart Chain.
Wow.
They didn't in fact have this beforehand. Obviously Olympus is primarily on the ETH network, and they've built out for Polygon and AVAX and some others, but really proud that they saw enough in us to kind of take us on, and we couldn't be any happier to have them as a partner and helping us with the management and supply and all the little intricacies that go into this. When we started talking about bonding, we actually had a lot of feedback from the community, worried about how's this gonna work? Is it, is this gonna affect the price, or what's gonna happen? And we just feel so rock solid having partners like Olympus that have absolutely perfected this concept over a long period of time under pretty much all market conditions. The leader in bonding, right? So
yeah, exactly.
We are very excited to be working with them, and can't wait for you guys all to go try it out.
Wow, that's huge. I sound like Owen Wilson over here. I just said wow like 6 times. But that is huge. The first and only BSC partner of Olympus DAO. That's major, especially for a project that you guys launched like 2 weeks ago, and you have secured a partnership with freaking Olympus. That's a big deal. Congratulations, you guys. I am super happy for you.
Yeah, thank you.
Yeah, I'll say that. I'll speak for everyone that's listening and doesn't get a voice right now. That is huge.
We are absolutely thrilled and very happy to be working with them, and we feel nice and warm and fuzzy rolling out this new bonding platform under their guidance, and having the security of their contracts. So literally they built the contracts that we're using. So and moreover have been actively running testing scenarios and all this. So we are super excited.
Yeah, I didn't know, and I actually know very little about, I would say like 90% of the projects that come in to do AMAs with us, just because most of the time I see like the AMA submission forms and we get hundreds in there.
Sure.
And so then we have that whole process, the team that weeds through stuff. And when people get picked to come on here, I do like a little brief look into them, because I figure, hey, I'm going to learn about your project really in depth if you're a good project when I'm having a conversation with you. And I've been pretty consistently just impressed in this conversation, from your team's background to what you're building, your ability to build, and seem like essentially unfazed from any negative market conditions. And I love that. Like, to me, You can really tell the quality of a team and what they're building when in a moment like that, right? In a moment of like, oh my gosh, the market's having a hard time. Are you guys going to stumble and fall, or are you going to build? And you guys are very clearly building. You launch a project the day that UST unpegs. You continue building. Your chart is up and to the right. And then 2 weeks in, you announce a partnership with Ohm. That's huge. Oh my gosh, no way. My power just shut off.
Day just rapping about the product, and it's just really cool to see everyone, really into it.
Well, I'm back. My power just shut off. Sorry about that. Literally the power.
Yeah,
it's
no
like
worries.
I'm on the East Coast in the US. And if anyone here is on the East Coast, it has been pretty stormy the last couple days. I felt like my truck was going to blow out of the driveway last night. So my power shut off and then turned right back on. So it muted me for like, you guys missed it. I was just ranting about how impressed I've been this whole AMA. And then
Yeah, we picked it up.
Perfect. And the DeFi gods just shut me down in the middle of my speech.
Yeah, I really can't understand. I really can't understand. I'm not a programmer myself, so I always just marvel really at the work that Jake and Matt have been able to do when it comes to their ability to handle these contracts and innovate in the space. It's truly a blessing being a representative of this project, reaching out to different influencers like Jake was saying, and other projects, because we find that the reception we get is always like, it's almost like, it sells itself in a way. People are always just super impressed. We don't they're always asking us more questions, like trying to just get at the next answer so that they can build their hype even more. So it's just been a blessing. It's been awesome.
Yeah, I totally agree. It's very cool watching what you guys are building. We say this pretty much all the time, but I am so much more interested in the team behind a project than I am just in some of the ideas, just because no matter the season, whether it's winter or summer, no matter, for the most part, as long as it's decent utility, if you've got a good team, you're going to thrive. And it seems very apparent to me that you guys have a solid team.
Thank you very much, man. We often get questions about worst case scenario, what happens if this goes wrong, we're not going to give price predictions and that kind of thing, but what we can guarantee is if something happens, we are definitely not going anywhere. You can see that in our original, our first project, that no man left behind. We'll spider webbed it all into this new ecosystem, and we're going to do the same thing here. We're committed.
Yep,
yeah,
exactly.
And kind of just reminded me, we've like Jake was saying, we've gotten questions like, what happens if this this nightmare scenario happens or whatnot, just to kind of point out one of the big benefits, I think, of the DEX ETF is that putting your funds in the DEX ETF, even if you think of it as an extension of the DEX ecosystem, if something were to happen to the DEX ecosystem, only 20% of the ETF is made up of DEX assets, right? So in kind of a doomsday scenario, if you had a bunch of funds in the DEX ETF and something were to happen to us, some kind of exploit or hack or something, God forbid, then 80% of your funds would still be safe. Held in the DEX ETF, I mean.
Yep, exactly. Rack said, one of the guys in the chat, he said, I have to say this, any project I get in, I try to find the upside and then the downsides. In this case, I am disappointed in myself that I cannot find a downside, but I'm more than happy that I found you guys. Kudos to the team. And then Equality said, the only thing better than a KYC team is Olympus saying these guys were the only ones worth partnering with on BSC.
Wow, that's great to hear, man.
Cool.
We appreciate all your all you guys. Yeah, that's awesome.
Yeah, this has been a blast having you guys. I'm excited for what you're building. The final question I want to ask you guys is a little bit unrelated to Dex before we plug everyone over to your community. We are over here. I don't know if you guys have ever had the chance to listen to any of the stuff we do. We are all about just, and especially in a bear market, that like this is the season to educate yourself and become well-versed so that you can actually take advantage of quality opportunities and you can figure out what quality opportunities are. Having a conversation with you guys, it's really clear that what you're building is not, you joked about this at the beginning, is not just another meme coin. And you guys are very well-educated guys in your own right. So the question we like to ask is, what is one source, whether it's a book, a favorite book, or a podcast, or whatever, that you guys enjoy using and utilizing, or have used in the past to further educate yourselves that other people could take advantage of?
Yeah, I'll tell you what. Again, I have a strong background in trading, professionally. But I'll tell you what, when I made the move from traditional markets, the bond market, into crypto, I had no clue what was going on in this field. I learned a ton of stuff on a pretty well-known platform called TradingView.
Mm-hmm.
If you haven't heard of it before, it's just a really great tool. You can set up a free account and kind of keep a watch list of all your currencies, or it obviously it has traditional markets as well. Just do yourself a favor, create a watch list, start making notes on charts, right? And go ahead and start finding. There's a really one of the really cool features is like an ideas, quote unquote ideas section, where basically everyone around the world publishes their ideas on what's going to happen next on a chart. And usually the more well thought out ones have just explanations about everything that they've done on the chart, and that their strategies. And the really cool feature is once it's published, you can go ahead and hit play like a week later to see how it played out, right? So I really learned a ton by doing this, just following a bunch of people, figuring out, even if you're brand new to technical analysis, you can just go see, oh, hey, this is a trend line. Start small. This is these are some simple wedge patterns and stuff. And then just keep notes, right? Write all your trades out and learn from what you're doing. That's what I would say.
Perfect. Yeah, beautiful. I love that.
Yeah, man.
Anything you want to add to that, Mark?
I mean, for myself, I was gonna say not as great a tool, probably, but when I was first getting into crypto, I was just following different influencers, right?
Mm-hmm.
One that I found particularly educational was box mining. I believe his name's Michael Gu.
Michael Gu.
He got me into VeChain. Box mining is the channel, and so it's just where I learned a lot of different concepts like impermanent loss and things like that. He's really good at explaining a lot of those concepts for newer investors.
Perfect. I love that. POX mining.
Box
mining. Got it. Box mining and TradingView. Sweet, guys. Thank you for those recommendations. If you want to actually pinned, if you're listening right now, you can find the Discord link to Dex Finance pinned in the ledger. Someone else, if you want to drop it so it's not just in the pins and it's recent, feel free to do that as well. After this AMA, head on over there, jump in their Discord, tell them Obsidian sent you, thank them for the awesome AMA. Is there anything you guys want to add? If people want to get involved in your ecosystem and your community and what you're building, what is the best way for them to do that?
Like you recommended, I would say, join the chat first. Like I said, we have a really amazing community. Our internal, team and moderators, there's always someone there to talk to, as well as I think our community is, second to none in terms of, community participation, right? A lot of guys there that'll, people there that'll give you, their thoughts on what to do and strategies, right? Also, please head over to our website. We've taken a lot of time to make sure all of our resources are listed there. We have a really great link tree that has, published articles. Our YouTube channel for those of you that are less inclined to sift through and read some stuff, right? And you can find a lot of good information on there. as well as a real deep technical dive in our official documentation.
Beautiful. Sweet. And seriously, guys, thank you so much for jumping in here, talking with us. This is one of the longer AMAs we've had. Usually we cut it at like an hour, but we had a good conversation. It was exciting to learn about what you're building. There was a lot of questions coming in. It has been a pleasure talking with you guys.